If you've run a business for any amount of time, you know the importance of cash flow. But do you know how to understand your cash flow? Do you know how to run a report on it? Do you know how to look forward in your cash flow? That is really the secret to really mastering your business finances. And one of the common misconceptions I see is that people don't understand what report they need to really truly understand their numbers and understand the money flowing in and out of their businesses. So one of the big misconceptions I see is people thinking that they have a cash flow forecast because they have an accounting software and they can run something called the statement of cash flows. But that is not the same thing as a tool that will help you make future-looking decisions, which is a cash flow forecast. So what I want to talk to you about today is the difference between a statement of cash flows and a cash flow forecast and why you need both in your business. So if you don't know me, my name is Smolinski. I am a fractional CFO and I own Clara CFO Group. And we are a fractional CFO agency and we help businesses all day long with their cash flow and helping them make good decisions for their businesses. So if you want to learn more about what we do, you can go to claracfo.com. Okay, let's talk first about what is a statement of cash flows, and I'm going to show you what it looks like, and then we're going to talk about what is the cash flow forecast, and I will show you what that looks like. So first of all, the statement of cash flows is a financial report that can come directly from your QuickBooks or your accounting system, whatever you're using, and this is going to be a report that is pulled together by the accounting numbers, by the system itself. So this is not something that you need to go manipulate. This is something that you should be able to run with just a few clicks of a button. And it's going to show you a starting balance, usually starting with net income and making adjustments to show you have net income, but what is all the movements of cash? There's going to be things like you've paid down your accounts payable, or you've collected on your accounts receivable, or maybe you've bought a piece of equipment that showed up on the balance sheet, or maybe you took an owner's distribution, which is an equity transaction, and that would be a financing activity. So there's these different types of activities that we do in our business, and without getting too nitty-gritty on the accounting classification between operating activities, financing activities, and investing activities. I'll show you that in just a second. And when we actually look at the report, all these activities are things that money flows into the business and out of the business. And what the statement of cash flows will help you do is it will help you kind of reconcile between what happened on the profit and loss and then what is actually happening with our cash balances on the balance sheet. So it is sort of this go-between to help you understand between what is the profit and loss telling you, what is the balance sheet telling you, and what is all the activity of the cash in between. So it is a very important financial statement, but I would say that it's oftentimes overlooked because a lot of times people just don't understand it and they don't know why it's there, and they really are not understanding all those ins and outs and those changes in all the different activities and those changes in all the different accounts. So I'm going to show you right now what a statement of cash flows looks like using the sample company in QuickBooks Online. So let's go ahead and hop in. Okay, so here we are in the report section of the sample company. So let's go ahead and find the statement of cash flows. I'm just going to type that in here, statement of cash flows. And I'm going to run this based on a report period. So statement of cash flows is always going to be run on a historical period. So I'm going to use this year to last month, just so we can have a nice clean ending to our statement of cash flows here. And here is the report. So this one is not very long. I'm just scrolling down. We don't have a lot of different things. I'm going to just summarize this real quick so you can see high level. We have what's called operating activities, investing activities, and financing activities. So really, operating activities are going to be like your day-to-day transactions. It's going to be the changes in your accounts receivable, changes in your accounts payable. It's going to be, basically just showing most of the changes on your P&L, and then also things that are affecting like paying off your credit cards and things like that. So you can see here listed, we have accounts payable, accounts receivable change. These are not going to tie to your accounts payable balances. This is going to be the change in the account during the period that we're looking at. And then other payables that you've paid off during the period of time. And then an inventory asset change. This is a loan payable, and then a MasterCard, okay, which would be a credit card payment. So this is going to be those changes to your short-term assets and your short-term liabilities on your balance sheet, which is going to be that kind of normal operation stuff we're talking about. And then investing is going to be things that are when you're spending money to create assets on your balance sheet. So this, for example, is a truck purchase. There could be other things that go into investing activities, but that's a good example of one there. And then financing activities are going to be things like long-term liabilities. Like here we have a notes payable with cash incoming of $25,000 and then an equity transaction here. Finance activities would also include if you take an owner's distribution. That is oftentimes something that kind of is people forget about, that is not a profit and loss activity. That is a balance sheet transaction. So this is a good place to check to see, like, how did my owner's distribution that I made to myself, or maybe I've made to myself so far this year, how is it affecting the total cash in the business? So that is where that would show up, because it is an equity transaction. Just to see here, so let's expand back out here. And this one starts with net income and then makes these adjustments to reconcile net income to cash for operations. And then these are other things that are directly affecting cash. And then at the end, you would have cash at the end of the period. Okay, so the way that you use this statement, it's really to help inform what has happened in the past. So I've had to have conversations with clients before where they're like, hey, I made $500,000 in profit, but where is that money? Like, I made $500,000 in the profit for the year, but I don't feel any richer. Where did all the money go? And then we can look at something like this and we can say, well, we were able to pay down the accounts payable balance pretty significantly, and we paid off a credit card, and then maybe we paid off a loan that we'd been working on for a while, and it looks like you took a owner's distribution of $200,000, and then we had to take another $100,000 to pay taxes. So all of that would be showing here on the statement of cash flows. So this is why it can be kind of like a third tool to help you understand your numbers and where your money went. Okay. Now, this is a formal financial statement. That is different than the cash flow statement. So the statement of cash flows is a tool that is going to help you explain what has happened in the past. And it is really, if you are asked by maybe a bank, for example, if they want to see a cash flow report, they're probably going to be asking for a cash flow statement. They don't want something that's hypothetical, like a forecast. They want to see what is an actual and what's happened in the past. So they might ask for your profit and loss, they might ask for your balance sheet, and then your cash flow statement, because they like to see, like, okay, I see you've made this profit and here's your balance sheet, but like, really tell me all the stuff that happened in the period of time as well. So that this is kind of that third gap. It is the bridge between the balance sheet and the income statement. So I would recommend, if you've never looked at your statement of cash flows before, definitely go and look at it. Run it for different periods of time. You can run it for a month. You can run it for a year. You want to look at it if you're going to be looking at your profit and loss, let's say at the end of a month. Try to make your cash flow statement run for the same date, and it'll help make it will all make much more sense if you do it at the same date, okay? You don't want to be looking at different time periods and trying to compare those two. So it's basically just going to show you a statement of activity and what happened with your cash during a period of time. So let's just run a quick comparison. So statement of cash flows is going to be backwards looking. Cash flow forecast is going to be forward looking, which means there's going to be some uncertainty, which means there's going to be a certain amount of educated guessing and planning and a little bit, so it's not as much of a science, it's a little bit more of an art. The statement of cash flows is more formal. There's a very formal structure. The cash flow forecast is going to be a little bit more informal. You can make it work for you, however it makes more sense. And it's probably going to be in something like Excel or formatted into some type of cash flow forecasting software. Both of them will be for a period of time. You can run your statement of cash flows based on a time period that makes most sense for you. And then your cash flow forecast can be on a time period, whatever makes most sense for you. And then the statement of cash flows is going to be a financial statement similar to the balance sheet and the P&L or the income statement, profit and loss income statement, same thing. And a cash flow forecast is really going to be a management tool. You do not want to be giving your cash flow forecast to any third party. So if a bank is asking you again for something that shows your cash flow, they are probably asking for the statement of cash flows. They are not asking for your forecast. Also, because it is a management tool. It's a decision-making tool. It is not something that is set in stone of anything that has actually happened, okay? It is kind of more a hope or a plan of what we think is going to happen, but it is not, concrete. So banks don't usually like things that are not concrete. So what a cash flow forecast is it's going to show you a beginning balance and then a projection of what you think incoming money will be, a projection of outgoing money, and then a projection of what your ending balance is going to be. And you can forecast that out either weekly or you can do it monthly, but you can forecast out as long as you would like. But the further you get out into the future, the harder it is to predict what the future is going to be. So we recommend, looking at cash flow forecasting, 3 to 6 months at all times. And then, you can always do longer term planning, but the further you get out, the looser that, potential projection could be. So, you don't want to make too many plans based on a cash flow forecast. So a long-term cash flow forecast. So I want to show you what a cash flow forecast looks like. And what I'm going to show you right now is an Excel spreadsheet that I have made available for free for anybody who wants to download it. You can go to claracfo.com/cashflow and you can get this free cash flow worksheet. If you'd like to be on my newsletter list, you can opt into that at that point in time. If you do not want to be on the newsletter list, you are missing out, but you don't have to be on it. You can just decline those offers there. So here's my cash flow forecasting spreadsheet. Here is the blank template. This is what you get when you get the download. This is just as I explained. You have cash at the beginning of a period. The time period is across the top here. You have income sources, cash in, which would be like revenue sources. You have your operating expenses of cash out. This is going to be things like your payroll, your rent, your insurance, your supplies costs, your utilities, things like that. And then I also have 2 separate sections with other things of cash going out. So this would be things like you are paying off a credit card or you decided to take an owner's draw out of the business and maybe you made a payment on your loan. All of those things would be cash going out. And then sometimes we'll have other random money that comes into our businesses that is not related to revenue. So it might be cash received from a loan or maybe some other kind of investment, or maybe you are looking at this just based on your operating account and you are, bringing money in from a savings account and you want to show that in your cash flow forecast. You can do that here too. All of this basically summarizes at the bottom of the total cash changes, basically beginning, plus, minus, and then cash at the end of the period. So I'm going to show you what this looks like when it's filled out with a real scenario. This is what it looks like when it has been fully filled out. So we have an estimate on what we believe our income is, and this has all been customized to the different types of income. And here are our notes on the assumptions that we put in as we were making this projection. This is really helpful if you already have a budget. You can kind of use your budget to put that information in here. And then you can make adjustments when you're like, hey, I know that money is not coming in like we thought it was going to. It's going to be delayed another month. You can move that income into another month. So that's the nice thing about this being in Excel. It's very flexible. You can use this, make copies of the tab, make scenario 1, 2, and 3. If we get that big payment from a client, if we don't get that big payment from a client, like how is it going to affect our cash flow? I have other videos all about cash flow forecasting and using it for scenario planning. So definitely go and check those out if you're interested in doing that. But the purpose of this video is really to just show you how different this is from a cash flow statement. So you can see that this gives us a lot of detail, and this is going to be forward looking so that we can say, hey, what happens if we don't go to that conference this year and we take that expense out? How is it going to affect the cash at the end of the period? Or, when do we get into an unsafe position of cash? If we don't want cash to go below $40,000, these red months are when it goes below $40,000. Can we afford to hire a new person? Well, what if salary goes up, by another $12,000 and I change that? And can I really afford this new person? Well, this is telling me that that's going to have a pretty negative impact on my cash flow if I don't have any adjustment in revenue because of that new person. So this is a management tool, okay? So hopefully you're seeing the difference between the statement of cash flows, which is a very formal financial statement. It is going to have very specific things that are on there. You cannot modify it at all. That is something that you might give to a bank if you're going out for a loan. And it is historical. That is the big thing about a statement of cash flows. The cash flow forecast is going to be forward-looking. It is going to be more informal. You're going to use it as a management tool, and it is going to be something that is flexible to help you make better decisions for your business. So I hope that has been really helpful to you. If it has, please make sure that you share this with another business friend, and make sure that you also give this video a thumbs up. I would really very much appreciate it. And if you want a copy of your cash flow forecast that you can start using in your business, grab one for free using claracfo.com/cashflow. All right. Thanks so much, you guys. Bye.